Great one. So let's get to the market. Let's check with the fixed income market space as we start a brand new trading week. Let's go down to the FMDQ exchange place where Gbenga Shuraike for Access Bank fixed income dealer is live to us on the program this morning. Gbenga, it's good to see you. Hope you had a very nice weekend.
Good morning. Yes, I did. And hope you had a lovely weekend as well.
Yes, I did. Looking a little bit better. So last week was really, really great for fixed income. You guys had a very nice, at the primary level and at the secondary. So I'm trying to look at what the playbook will be for the third trading week. I'm sure the DMO is on your calendar.
So in the fixed income space last week, activity was really centered on the treasury bill side. Not much activity on the bond space as well. So we can see that was mostly influenced by growing demand on the shorter end of the curve. That's the T-bill side. So we are seeing that the CBN is not offering 1 year or more bills. So we've seen that demand filter into the market, basically, and which as well filtered into the primary market auction last week. So that was what grew that demand to about over 500 billion on Wednesday. So we saw rates come down to about 12.845 levels. So really, that was mostly good for the T-bill side. But on the bond space, we see market just been a bit quiet and jittery, waiting for the run to be done on the T-bill side and people to move towards the longer end of the curve. But we've not seen that yet.
Okay, so what's going to be the catalyst for the Naira bond market this week?
We have a bond auction next week, so at least towards the end of the month. So we still expect that to give us a cue to where rates are going to go from here. But for now, really, it's just going to be a quiet market. No, we don't see much activity going in, and just a bit of bargain hunting from buyers and a bit of sell, just people taking profit, bargain hunting for grey yields, but typically not much activity throughout until the bond auction, where we'll see what direction the market takes us to.
Yeah, but by this time on Monday, the Monetary Policy Committee of the Central Bank will be sitting for their two-day meeting. So what's the outlook on the fixed income space in this week, counting down to 25 and 26?
To be honest, we don't expect much to change in MPR, MPC, really. It's still a cautious outlook in terms of what they expect or what they think going forward. Inflation, we can see, is a bit around current levels. We don't see it moving much. It's about 11% levels, really. So we just expect MPC to just remain cautious. Most people are expecting something to change maybe by the time we have a new CBN governor. But until then, we just see people playing a more cautious role.
You don't see any surprise?
So we don't expect any much.
You're not expecting any surprise move by the central bank?
No,
now that the elections are over?
Elections are over. Your dollar is strengthening on the back of the elections. We've seen improved flows from offshore as well. So really, there's really no incentive to tweak anything at the moment. Really, it's going to be what policy directions are going forward the CBN is going to take after the new CBN governor takes over. But for now, we don't expect much.
Yeah, but would you be looking at the fiscal space? What happens on the side of the government, not even the central bank?
Well, I didn't get a question.
Yes, I was asking, so we know the central bank, the MPC will most likely sit pat, as it were. But again, on the side of the fiscal authorities, are there anything on your radar that you think the market or investors would like to see from the fiscal space in terms of whether macroeconomic policy?
So in terms of macroeconomic policies, also we take a cue on who Buhari is going to appoint as his new Minister of Finance as well. So really, you can't really judge anything yet until a new cabinet comes in and you have a new Minister of Finance or he retains the current person. But you can't really say, really, there's really no policy outlook for the new government until then, before we can determine what physical authorities or what physical policies are going to go on, are going to take from there.
Okay, so what we do now, we just write the yield curve, as it were, right?
Yeah, basically that's what people are doing, trying to get right on the yield curve. That's why they're staying on the short end of the curve on the T-bill side. Nobody's really ready to play in bonds. So people just taking a short-term outlook towards what next will happen in terms of Nigeria fiscal or monetary policies. Okay,
we all are in Lagos. Where the market lives, we look up to Abuja. That's a great one. Thank you very much. Gbenga Shuraike, who is the fixed income dealer at Access Bank PLC. So let's get back to the stories making the headlines today. The Lagos Chamber of Commerce and Industry says the new policy of FX exclusion of all forms of textile imports will put Nigeria's fashion and trading in textile sector at risks. According to a two-page press statement released at the weekend, the chamber says the range of fabrics produced by the Nigerian textile industry cannot support the fashion industry in terms of the quantity and quality. It went on to say that the vibrant fashion industry in Nigeria should not be sacrificed on the altar of textile industry regeneration. So the chamber is advising the federal government to strengthen domestic industries, enhance their competitiveness, and reduce their import dependence as espoused in the Nigeria Industrial Revolution Plan. Meantime, the agency also, the chamber also wants the power or electricity issues to be addressed, which is a major problem, including the high operating and production costs for textile manufacturers, as well as robust incentives and concessions for them to grow their businesses. In the housing sector, the big story you already know is in sharp focus, the new laws and investment, as well as penalties rolled out by the Nigerian government. This is already on Market Street and is causing some upset, as it were. We'll talk about that. The government, however, on the other hand, is lowering the bars on equity participation for housing loans. If you're planning to have a loan from the commercial bank or the mortgage bank, if you're looking for 5 million naira or any amount below 5 million naira, your equity participation will be 0%. So the government, they moved the floor on that. But if you're looking for any amount for housing loan between 6 million and 15 million naira, you will now contribute 10% of that instead of 20%, which was the threshold earlier on. And that came over the weekend, while some of you having a nice weekend. Now the government is moving to help with that. But it's a big story on both the carrot and the stick. We're going to balance all that out for you here on the program. Meantime, as you already heard on the show, it's a busy week on the Market Street for the Securities and Exchange Commission starting tomorrow, Tuesday, with Budget 2019 seminar. Even though the National Assembly is still poring over that, we don't have that yet. But we will, the SEC says to talk through the draft presentation presented by Mr. President last December. And of course, your first CMC for this year on Thursday, the 21st. And the earnings season is here. If you're in the market, you already know that the big banks are the ones making some of the headlines. Access Bank and UBA reporting their earnings last week. Access posted 43.85% earnings per share growth, while UBA earnings per share was just 0.46%. And of course, you have the big story there. The central bank and the SEC have said, go ahead and combine your businesses. That's what Access and Diamond will notify the stock exchange that they've gotten approval of the regulators for their merger plans. But those approvals by the shareholders will still be subject to the judicial sanction by the Federal High Court. Big stories there. Finally, this morning, we have the, in case you know what the story from the NNPC, the State Oil Corporation says 12.13 billion naira is the trading surplus for the month of December last year. How did NNPC get a trading surplus? Well, the corporation says its crude oil production was better in the last month of 2018, while 332,000 barrels per day was what it produced, but it's targeting 500,000 barrels per day by the year 2020. That's just next year. And that's the story. But the vandals are still doing bad business on NNPC facilities. The NNPC group says about a 34% increase was posted in terms of breaches to its pipelines last year, and says the Ilori-Ibadan network suffered 90 in terms of total vandalization of its pipelines last year. The oil thieves and oil bunkers are still in business. This is your Business Morning, this Monday, the 18th of March. I am Bosun Amafaye. We'll see you again tomorrow. Have a great day, everyone.